key learnings have been, while global investing is very exciting, it's equally challenging too.
Give us a few unique aspects of this strategy.
Not for the sake of being a contrarian, but we tend to think very differently compared to narratives. There are three broad themes that we are very, very excited by because those brands are also very relevant in a high growing markets. I would like to put myself in the shoe of an investor, and that's the way I do my own personal investment too.
What about risks? Hello everyone. Lately there has been a lot of buzz about global investing and especially DSP Global Equity Fund, which is getting launched from the Gift City platform. To know more about how it is structured, what is it made of, who is it for, we have with us Natraj, who is part of the investments team of DSP and also an advisor to that fund. So Natraj, welcome.
Thank you so much, Manish. Look forward to interaction.
First question first. What's your experience about global investing?
In my 25 years of investment management career, I have managed 2 global strategies, cumulative of 10 years. 3 years I was in the Middle East managing a closed-ended GCC fund, and about 7 years managing an emerging market fund where we used to crisscross about 12, 13 emerging markets, meet companies and investing in those in those companies. The key learnings have been, while global investing is very exciting, it's equally challenging too. We have to navigate a lot of macro noises and talks about geopolitics and stuff like that. What has helped me in those periods is that to keep away from those big picture narratives and focus on the company bottom up and therefore build a portfolio around it. Rest, as long as one employs the first principles of equity investing, there is no difference between how one would approach a portfolio construction for an India mandate or a global mandate.
Okay, that sounds realistic. So Natraj, if you had to give us a few unique aspects of this strategy, what would they be?
There are 3 essential aspects I would want to highlight here. One is that if you look at the benchmark indices, there are about 2,600 companies and it tends to be very noisy, fragmented. So we don't want to keep attention on the index. We are essentially trying to build a 30 to 40 concentrated, index agnostic, sector agnostic, country agnostic strategy. Point number 1. Point number 2, there always is a narrative anywhere in the world at any point in time, not for the sake of being a contrarian, but we tend to think very differently compared to the narratives. And third, we truly believe that investing for the long term, which is at least 3 to 5 year perspective, tends to have better outcome than focusing on every quarterly noise that tends to come out everywhere. So those, I think, are the key points that I would like to highlight.
Okay, so you mentioned country and sector agnostic. Still, are you looking at certain themes where you'll be focusing more?
Over the life of the fund, there are 3 broad themes that we are very, very excited by. One is obviously technology. There are a lot of things happening globally and that excites us. Second, global brands and consumer discretionary is a very exciting space to be in because those brands are also very relevant in a high growing markets like emerging markets like India, Brazil, Russia, China, Asian countries and so on. And 3, we also tend to think that the industrial space, the power utility, the boring commodity space also tends to give outsized returns in certain economic conditions, which these 3 sectors would tend to be the big allocations in the portfolio over the long period of time.
Perfect. Makes sense. But how should an Indian investor figure out the allocation?
So I would like to put myself in the shoe of an investor, and that's the way I do my own personal investment too. If I want to have 5, 10, 15, 20%, whatever that may be, that you decide is relevant from your asset allocation point of view, that I should invest in global themes, I would still recommend 60 to 75% of that should be in a passive strategy because it gives you a low cost exposure and you get the index returns. In the balance 5, 10, 15, 20, could you choose an active manager who is not looking at the index all time and therefore building up a bottom-up portfolio and is absolute return focused? And that's where you should think of someone like us, which is the DSP Global Equity Fund.
You talked about returns, you talked about themes, you talked about allocation. Now my last question, what about risks?
Yeah, very interesting question and also a very relevant question. So there is always geopolitical issues that happens anywhere in the world. There is interest rates movements, there is forex movement, there is change of political situations at each of these countries. We are not the expert in trying to predict all these. And people who have spent many years trying to do that have not mastered it. And so therefore, our humble opinion is that we like to view our investment framework from the bottom up. Can we reflect that in the financials of the companies that as much as we can do to humanly possible, and therefore reflect in the valuations of the company that we want to buy in, not necessarily wasting time trying to predict these macro variables, which tends to go either way over the long period of time. The second aspect of risk is Forex. We don't take any Forex hedges in the portfolio. We have 5 exposures in the underlying portfolio: US dollar, euro, Japanese yen, South Korean won, and Hong Kong dollar. In these 5 countries, they tend to have different movements during the year, and as much as possible, we reflect again those in the numbers, not necessarily from a portfolio hedging point of view. But over the long term, we don't know what's going to happen to rupee versus dollar or rupee versus euro in the short term. But over the long term, theories tells us that as long as there is an inflation differential between us and a developed country, currency tends to be weaker. And that is what we have seen. If that were to happen, return is better, but we are not experts in trying to predict that.
But as an investor, what do I have to do? What do we have to do to make sure that we can navigate past this?
Global investing is not different from your framework. How should you approach India investing? Stay invested for the long term, believing in certain principles and philosophies, if you like, with the manager. Stay invested in the long term. And we have seen many times in the past, the return tends to be better. The outcome tends to be better. Short-term volatility and gyrations in NAVs and markets and economies may happen. That we can't control, but that's part of the investing risk that anyone has. But typically, staying invested in the long term tends to have better outcome.
Thank you so much, Nataraj, for walking us through the structure of the fund. Now we definitely know who is it for, how does it work, and what should one know before investing in this fund. Thank you so much for that.
Thank you for your time.
That was Nataraj walking us through the investment philosophies and principles of this fund. Our request to you: talk to your mutual fund distributor or advisor, or do your own due diligence before investing in this fund. Thank you so much.